COVID-19, a health crisis that has morphed into an economic and financial crisis. Its severity and unpredictability has frayed many nerves on Main Street and Wall Street. Markets hit a low on March 23rd. They've since pared back some losses. With so much uncertainty still around, many questions remain.
Q2, there won't be too much good news. Q1, we'd just started seeing COVID-19 roll through China. We're really starting to see in Q2 that hitting the rest of the world, Australasia, the rest of Asia, Europe, and the United States. So we're going to see things get worse before they get better, and Q2 will most certainly be worse than Q1.
You never knew where the bottom was. I would say this one that we're experiencing now, we just had this amazing, 30% drop in the space of literally less than a month, and then an equally powerful 20% rebound thereabouts. Wouldn't surprise me if we roll over a bit now, perhaps retest that low, and then I think we can recover. I do expect that the market should recover this quarter.
Given the fiscal and monetary policies that's been given up around the governments around the world, and even central banks as well, we do not expect the asset prices to go down as low. In theory, yes, in the worst case scenario, prices can go down to zero, but in the current scenario, we are talking about companies, corporations, governments, everybody have now defaulted. The current scenario is going to be very difficult given the current measures that's taken place. I do not expect the prices to go down to as low as those levels that we've seen previously in the first quarter.
Markets generally tend to price in an economic rebound somewhere around 3 to 6 months before it happens. For now, the economic outlook still looks bleak. This week, the International Monetary Fund warned that the world economy would experience the worst recession since the Great Depression. The IMF expects global economic output to shrink by 3% this year.
We're looking for a V, but actually the bottom of that V, we're not expecting to come until well into the second half of this year, possibly even, not until the end of this year and the beginning of next year. So we're looking for world GDP this year to go down by about 2.3%. And then next year, we're looking for it to rebound by 7% thereabouts. It won't feel like a V shape, though, because I think that as we progressively, find that the virus is coming under containment in various parts of the world, they'll only let us out slowly. They'll do little tests here and there to see how much of the population can go back to normalcy without risking, second outbreaks, third outbreaks, fourth outbreaks.
Everyone's hoping that it will be a V-shaped recovery, but I think that's wishful thinking. I think we have to be realistic now that the world will be deep in a recession. How fast it recovers, of course, will depend on the trajectory of COVID-19 and how soon that the countries get on top of that. Even after they've got on top of the actual outbreak itself, I do believe that borders will remain closed, and that will be a big drag on economic growth. I think the best we can hope for is a U-shaped recovery, and that will be a very broad bottom of the U.
It's going to be a U-shape, but the U-shape now, we are expecting at least a longer period of the low before the U comes back up. We have already more or less seen the worst of it. But which means that right now, what needs to be done is to make sure that the livelihood of people will continue. Now, with US and some parts of Europe looking at reopening the economy, that they have to manage and calibrate their approach very carefully. Because the last thing we want is for further flare-up in terms of the spread of this virus again. The economy will slowly pick up, but at a very slow pace until a vaccine has been found. What we want to see is that the world has now gotten a grip of the situation. Right now, we have not seen anything of that sort. The world is still grappling with uncertainty in the sense that how is this disease being spread? How do we control the spreading of this disease itself? So until such stage when we have got proper measures and there's greater clarity in how we can handle this, the condition is not right yet.
Generally, these times have been times to buy good things. The one sector that has really held up the best is surprising. It's technology. Technology had already outperformed so much on the way up, and everybody had already piled into it. You would have thought that's what would have underperformed, simply because it had outperformed so much on the way up. But it didn't. It actually outperformed on the way down, too. And to me, that speaks to a major strength of the technology sector.
I don't believe that it's the end of the safe havens. I think the traditional ones, such as the US bond market, the US dollar, the Swiss franc, and gold will still remain havens. But we have to emphasise that havens doesn't mean positive investment climates. It's a way of protecting capital. Cash is always king. No one ever went broke taking a profit. And if you are going to be invested in stock markets, for example, you need to be in the things that people need to use in their daily lives, no matter what is going on in the world. And by this, I mean utilities, water, power, telephone, food, internet,